Yo, it's Teddy, Caravan Crypto, and I'd like to say thank you for tuning in and checking out this video. I know you can watch a million billion other YouTube videos, but I appreciate you watching this one. So today we're going to talk about trading, how to read a chart, and looking at entry and exit points on crypto and Bitcoin. You can use this for anything on a chart, but we're also gonna kind of take a deep dive into the Bitcoin boss method by my brother, Sensei Brandon Kelly, when it comes to freestyling on the Fibonacci and reading these charts. Um, Keep in mind a few things. One, trading is absolutely a sport. All right, it's not something that you just read about one time and you're good. You have to practice. Okay, it costs tuition. Like, you could read about basketball, you could read about football, but until you get on the court, until you get on the field, it's just rhetoric. It's just information. So don't think that you won't lose anything, because even the most experienced traders take losses. But you only truly lose when you sell. And sometimes you should. So, and what I mean by that is, like, let's say you got into Bitcoin at 9,800 and it dipped down to 9,200 and you sold there. You lost for sure. And maybe you should, because maybe it could go down to 8,800 or 8,500. And so selling at 92 saved you some money. But if you held from 9,800 down to 85, and let's say it spent 3 months at 85 and then it shot back up to 11K, then you didn't lose, because you held and you won at the end of the day, and that's why you really only truly lose when you sell. So the key is to buy low, sell high, sell higher than you bought in, right? Not to buy high and sell lower than when you bought in. All right, I know it seems fundamentally like, yeah, Teddy, duh, but you will be surprised, okay, how many people don't do that, number one. And number two, how many people get shaky hands and trade when they see negative price action occurring on the chart. And, they freak out and they want to hedge their losses and they sell and they don't find a better entry point. Okay? So just keep that in mind, all right? It's just, and it's something that I got to tell you, okay? So the timing of when you enter a position is the key to earning a profit. You really truly earn money when you buy. It's not necessarily when you sell. It's when you buy. All right. Again, this is not financial advice. I'm just some random guy on YouTube. But hopefully through this video, you can get a better idea of what it's like. I've been doing this for a few years now. I wish my brother Lucio was with me on this video. Brother Lucio is a trader, like, for real, and him and BK are in a chat. BK has a paid chat group that you can work with. That costs a monthly fee, but not only do you get information about when to buy, when to sell, how to set stop limits and stop losses, but you learn also how to read these charts, right? How does the fundamental of chart reading truly work, and from somebody who's very experienced in doing so. Okay, so that's my caveat here. All right, but we're gonna look at the prices today. So, man, Bitcoin is extremely resilient, dude. Extremely. I really want this number over here, this price of Bitcoin. I want it to be, in the 7,000s, right? If I can get to like 75, 78 even, man, if we can get to the 7,000s, I mean, that would be awesome. I would love that. And I keep seeing it, like, almost go there. If we look at the chart from yesterday, you're going to see that this thing, it tanked, right? Like, everybody was talking about it. Everybody's like, oh man, Bitcoin is taking a nosedive, and it sure did. It sure did take a nosedive. We were watching it too, because last night me and the brothers had a meeting about buying some of these long shot coins so we can, you know, try and hit the lotto with, because there's coins that are like that. We had a coin, man. We were in Bitcoin, and this is like when we first got into crypto. We had no idea what anything was. We were buying all these other coins that we were kind of doing a little bit of research on, and I'll do a whole nother video on how to do that, or how we do it anyway. But we were looking at all kinds of coins, and we bought, I don't know, we bought tons of coins, tons of different kinds of coins. And Bitcoin, we had some leftover, what's called dust from Bitcoin. So like dust is like, you know, 400 Satoshis, 800 Satoshis, maybe even 1,000 Satoshis. This is like small amounts of money, like 0.000001 Bitcoin, right? This is like really, really, really tiny bits of money. It came out to be like 20 cents. And so we put 20 cents into Bitcoin. And one day, we weren't paying attention to it at all. But one day, Lucio got an alert about Bitcoin, and we looked at it, and our 20 cents became 86 bucks. And we were like, I mean, just kicking ourselves, yo. We were fighting each other and then fighting ourselves at the same time. Because if we had just put like $100 into there, which is what we were doing with all the other coins, you know, a few $100s at a time. We had just put, man, if we had put $50 into that, we'd probably be looking at, you know, maybe 30 or 40 grand. And so we're noticing we're in a new cycle. A lot of hype in the market, a lot of institutions, a lot of big money investors, a lot of news, a lot of Bitcoin naysayers that have been naysayers for years now openly claiming their positions in the space. You know, this is an unprecedented time. We didn't have any of that in 2017, right? So now, you know, now that we know, okay, look, this is like real deal bull market. Verge coin also did really well in the last few days, last couple of weeks actually. So you know, last night we were looking at these small cap coins, some projects that either have had great fundamentals for the past few years, or projects that are new that have a lot of great marketing that also have good fundamentals, and that we could put a small amount of money into, you know, $1,000, 500, 800, you know, 100, 200, and also and you know, have it pop, have it go crazy, have it do an insane run, and you know, be able to hit some high marks, right? Some high profit margins. And so that's what we were doing last night. While we were doing it, we saw this tumble down here in real time. You know, we had like a 3 or 4 hour meeting about it. And so we were watching this play out, and I was hoping, man, we were looking at it like, right, actually we were looking at it down here, right? It was like an 8,900 something when we left the meeting. It was like playing around down here, and I was hoping that we would finally break 8,800, and we did not, man. We did not do it. This coin is very resilient right now. This isn't the first time that Bitcoin did this. So it went down all the way down here. Everything looked, you know, all doom and gloom, and we were kind of happy about it. And then boom, this thing starts to make its way back up. And now, dude, we're only like $100 away from where we were. 9,300, dude. Like 9,400 was where we were at yesterday, dude. We were like right around in this area. This isn't the first time it happened too. Right here, did the same thing. Tumbled down, and then boom, started popping back up. You know what I mean? The same thing right here. We've been looking for this thing to come down, and it always looks like it. But I think people have a ton of buy orders set pretty low and want to come back in and push the price back up. So anyway, we're going to look at the prices today, mostly down, like I said before in another video, probably a few previous videos. Bitcoin will take a nosedive, and it will drag the entire market with it. Sometimes you have coins that are not pegged to Bitcoin, but for the most part, they all are. So if you see Bitcoin tanking, it is probably a good idea if you have a position in an altcoin to get out, because it will probably tank as well. Now, yeah, most of the market. Nah, I think yeah, most of the market basically is looking like the same thing. All right, and today is June 15th, 2020. Okay, look, I want to talk about this method that we have. It's called the Bitcoin Boss method. Brandon Kelly uses fractal harmonics, Fibonacci's, and natural numbers and mathematical anomalies that are applied to the universe that we live in. He takes those and combines them with chart metrics and patented this method of reading the chart. And he says if you're an institution, if you're, bobblehead boy on Wall Street, then he'll sue you for using this method. But if you're just regular folk, just like me, right? Me and my brothers and all my family that invests in crypto, if you're like us, then this method is for you to use for free. Every day that he graces the microphone is a chance that you have to get paid. You know what I mean? And so I would suggest typing into Google how to chart like a boss, watch this playlist, watch this video, and figure out, and get an introduction into what it's like. And he's got tons of videos on YouTube. Brother's dope, brother's tight, man. Got an Instagram, got a Facebook group. I think there's 20,000 people in the Facebook. He's tight, man. So yeah, this is who we learned it from. So instead of me, taking the well water, putting it in a bottle to sell to you, I'm bringing you to the well. All right. So don't say I'm trying to squeeze in between and take some of that water and contaminate it with what's in my plastic water bottle to sell to you. Nope. You're gonna go to the waterfall or the well, the river, the spring that I get the water from, and I'm gonna show you how to do that. Right. So right here is it. He's also got the YouTube channel up, Brandon Kelly, crypto trader. Brother's tight, man. He graduated from Notre Dame with, I forgot what his degree is in, but he's sharing all his knowledge with you. All right, it's all here. And this is what we use to trade with. We found that it works at a very high degree. Okay. Now, all right, look, we go to TradingView, which is what we use to trade with right here. Matter of fact, I'll just start all the way fresh. So you go to tradingview.com, come in, and this isn't typically what it looks like, but when you have like a paid account, this is what it looks like. And it's got all this stuff. It's got advice from people and whatnot. And I don't, we generally don't follow all that, right? So, and while we've been sitting here, man, Bitcoin is at 93.59. It's climbing upwards, climbing back to where it was. And this is just how volatile it is, man. Now, when you go to markets, right here, this tab that's markets, go to cryptocurrencies, go to Bitcoin, and there's other ones you can go to too, but let's go to Bitcoin. All right, so Bitcoin is, there's a lot, all right, so over here on the right, you're going to see many different names of things, right? KuCoin, Binance, FTX, Bitstamp, Bitfinex, all this stuff, right? These are exchanges. Now, the bigger your exchange, right? And what I mean by bigger is that, the more volume that there is on an exchange, the more accurate typically the price is going to be. Okay, so if you have more people buying and selling on an exchange, they're determining what the price is on that exchange. Other people are probably watching that exchange, even if they're trading on smaller exchanges, and adjusting accordingly. So if they see that on the big exchange that the price just went up 5%, and on the low exchange it's still down, it's still under that, it hasn't rose up 5% because it hasn't caught up yet, then they might buy it at a cheaper rate on that exchange. Uh, and conversely, right, somebody might be on the Binance exchange, the big one, which is hard to move, and they might see that the lower exchanges are dropping in price and the higher ones hasn't yet. They might sell because they anticipate that the market is going to follow. And this is just like some of the things that you can use to figure out where you're going to go. However, stick with the fundamentals, right? If you bought in at a really good position, then you don't really have to worry about those smaller changes, right? We're not looking for like a 5% gain, really. We're looking for like the 25, 30, 15, 20 in the next week, 2 weeks. We're looking at man. Brother Lucio showed me a trade that he did, and he's up like 86%, I think it is, or 81 or something like that on a trade over the last week or so. That's what we're looking for. We're looking for trades like that. All right. So this little 5, 10, 12, 7, this stuff isn't that attractive for us, especially right now where we got a ton of volatility. We're at the beginning of a market. You want to be looking for higher gains. Okay. And so you want to get great entry points. So over here are the names of the exchanges. Binance and Gemini are probably going to have the biggest volume, right? You also have like Poloniex might have it, Bittrex might have it too, but I would go with Binance or Gemini. Sorry, this is Gemini, this is Binance, and that's just me. And you typically have the largest volumes of trading anyway. So then over here to the left, you have what are called trading pairs. So what a trading pair is let's say your trading pair is Bitcoin and the US dollar. That means that when you buy Bitcoin, you use US dollars to buy it, and when you sell Bitcoin, you sell it for US dollars. Okay, so you're either going to be in Bitcoin or in the US dollar. Now you don't have to do just those trading pairs, right? And before I move on, this is the high. This is the highest that it got, which is today is 93.90 in the last 24 hours. This is the lowest that it got, and we're already green, even though we had that dip from last night. But the rating here is still saying to sell. And a lot of people might listen to this, so it might not be good to buy right now. It might be good to dump out and let everybody sell. It might not be good to come in. But I don't listen to these because everybody has access to these. It's not a very good indicator. Okay. So let's move on, right? So let's say I want to open up. I go to find my Binance exchange, and I also want to find Tether, right? Because the Tether is a stable coin. A stable coin means that one coin equals $1 if it's a stable coin for the US dollar. So if one coin equals $1, then it acts as the US dollar does on an exchange. The reason why you wouldn't use the US dollar per se is because people aren't usually trading in the US dollar, they're trading in Tether, on these exchanges. So you want to follow the price according to Tether or another stable coin if that's the popular trading pair on an exchange. But you want to follow Tether here on Binance because then you can get the most accurate price read and your charts will be the most accurate because you're working with the highest volume of traders, of buyers and sellers on the market in order to, measure what you want to do right now and accurately predict what where the price is going to go. All right, so I'm going to click on this, open it up, boom. I'm in the Tether chart. And this is just like the preliminary chart. It's just to give you an overview. And here's the other ones. You know what? This is on Bittrex here. We're going to go to Binance, right? And if I click that same any one of these, if I keep adding these, it's gonna add a colored line to show me what the chart is looking like on that particular exchange. So I'm going to turn all these off and I'm just going to leave Binance. Oh, I can't leave Binance. Let me go back. I think I clicked the wrong one. Sorry. I'm going to, where's Binance, man, with Tether? USDT Binance. Here we go. And it's still showing me Bittrex. Anyway, I'm going to line up the Binance thing. I think it's showing the same prices anyway, or roughly. But down here, you have other things like, this technical indicator, it's telling you to sell, right? Yesterday it was at buy. Early yesterday it was at buy. It's a strong buy. The day before, now it's at sell. This thing is pretty wrong. All right. All right. So then you have all these other things, other traders putting up their charts, how they read it. You also have tons of articles. Man, Roger Ver's Bitcoin.com YouTube channel gets banned as the purge continues. It's crazy. So yeah, you have all this stuff going on, and it is what it is. I would go to this click this right here, full featured chart. You click it, it's gonna bring you to a new chart here, or like the full chart. Obviously ours is littered with all kinds of stuff, but I'm gonna break down what some of this stuff means. So we're gonna hit this little icon, the square icon, to enlarge the chart. This is a 1 minute chart, so forgive me, it's gonna take a while to load. It's loading a lot of data, a lot of candles. All right, I'm gonna zoom in. I'm using my scroll wheel on my mouse to zoom in, and then I'm just dragging this across here. There's a lot of tools that you have on TradingView, but we're gonna get into the fundamentals here. So these are 1 minute candles. Up here, I see the time intervals for my candles, and what a candle is a measurement of price in a period of time. Okay, so there's day, time, and then there's also the amount of time that a candle exists within. These candles are 1 minute candles, so each one of these represents 1 minute of time. And so you have June. It says down here at the bottom down here, you're gonna see when I put my cursor over a candle, it's gonna give me the day and time of that candle down here. All right, so this is the 15th of June 2020 at 9 a.m. This is the 15th of June at 9:01. This is the 15th of June 2020 9:02, and it just keeps going like that. It goes, you can go backward, you can go forward. What we also are looking at is these lines here. These lines here are called moving averages, and we're going to get into that also. Now with these candles, for example, this candle, so on a 1 minute chart, it takes 1 minute to make this candle. The way a candle is being made is basically how we're looking at it right here. I'm going to try to enlarge this so you can see it. I wish this candle would move so it can give us some action. But for example, you have this green candle. This means that a green candle means that this 1 minute interval, within that the price went up from the previous candle. Okay, so this candle means that the price went up, and then this candle means that the price went up. When it's red, this candle means that the price went down from its previous candle, and in this candle the price went down from its previous candle. And what that and the way a candle is being made, like you can see it right now, as the price fluctuates, that gives us a determination of how big or small this candle is going to be. So for example, with this green candle, it started down here at 93.58, and within a minute, at the end of a minute, so it started at the beginning of the minute at 93.58. At the end of the minute, it ended at 93.72. Now this wick over here, this green line, I don't know if you can see it on your screen, but this green line over here that is at the top, this means that within that minute the price went all the way up to 93.92. But at the end of that minute, it closed down here at 93.72. And conversely, this wick over here at the bottom, if you could see it, this bottom wick, this hit as low as 93.55, but it ended at 93.72, right? So because it's green, we know that the bottom of the block is where it started at, the top of the block is where it ended at, and within that it reached a low of this bottom of this wick, and it reached a high of this top of this wick. And then the next candle over started at a price of 93.71, ended at 93.84. The highest it went to was 93.86, and 93.84 was actually the lowest. And then on this, it means that the price went down. So it started up here at 93.74 and it ended down here. And same with this candle. It started up here at 93.71 and it ended down here at 93.63. Now each one of these 1 minute candles is producing a measurement of price action within that minute of time, and it just keeps going. And as you can see with these different, with the new candles that are getting made, it's taking a time, it's taking an amount of time, that 1 minute to make this candle, and the price is fluctuating within it. So we don't know until it finishes if it's going to be a green or a red candle. And over here on the side on the left, you can see that there's 13 seconds, 12 seconds, 11, 10, and this is just going to count down until that timer runs out, and then it's going to start a brand new candle right next to it. All charts everywhere work with this fashion. If it uses candles, it's working like this. So you can apply this to anything you want to do, stocks, commodities, whatever you're looking at. And TradingView offers all of those things in terms of charting on the website. All right, now we're going to get into what are these lines over here. Okay, so there's a number of indicators that you can use to indicate what we're actually looking at. So these candles measure price action, and that's cool, but you may want to measure a number of candles to get a more accurate representation of what's happening. So over here, if we look at what are called MAs, right, moving averages. Let me turn these off. I'm going to turn a lot of these off. Okay, so what is that green one? What's the green? Oh, it's right here, volume. Okay, I'm going to turn. No, it's not it. Sorry. I'm trying to find this thing. Okay, there we go. Okay. All right, so we're just going to turn this on right here. This is the 7 MA. So this is the 7 moving average. The way to get to a moving average is you go up here to indicators, and you can hit moving average. And then once it appears on your left here, there's this eyeball that says hide or show, right? And then right next to it is a gear box, and you can set this to any color that you want, and you could put the precision. I wouldn't mess with this precision. I would just put it at default until you kind of get good at it. But you can give it a length, right? So for this, we're looking at 7 candles. Okay. I don't know why this popped up. All right, so what this means is where this line is at is going to represent the price of the last 7 candles. Okay, so as it measures the last 7 candles, you could see that it begins to go up here. Even though the price is up here, the price is up here, the price is up here, the moving average of the last 7 candles is still down here. Until you get, and then as it goes up, if it's going up, that means that the average of the last 7 candles is going up. And as it tapers off, that means the average of the last 7 candles is tapering off. And that's what that means. So it's getting we're not looking at 1 candle, we're looking at 7 candles when we look at the position of this line. If the line is pointing up, it looks like it's going up. If the line is pointing down, it looks like it's going down. If it's kind of flat, as you can see over here, it's more flat than these other lines, right? It's flatter than even this line. That means that it's going sideways for a second, right? But because it's only using 7 candles, it's really easy to move this line, okay? When you look at this line on a wider scale, this thing is, over a 1 minute of time, this thing is going crazy. So if I add the 77 minute, which is another the 77 candle MA, what it's doing is it's taking an average of the last 77 candles to give a measurement of position. So in order to move this line up, there needs to be strong price action in an upwards momentum in order for this blue line to go up, right? Because this is now 77 candles. So if you can see, compared to the two, this white line is way more volatile than this blue line, right? But this blue line is giving you a very good indicator over a longer period of time of where we're going. So to move this white line up doesn't take much, right? It only takes 7 candles. But to move this blue line up, you know, you're probably looking at 40 to 50 candles, or 30 to 40 candles to start to hook this thing up in an upwards momentum. So if this blue line is looking like it's going up, we're probably heading up. So it's a good indicator that we're heading up. Now, you have other indicators like the 231, which is 1. And then I'm going to add here a 343, which is another candle, amount of candles that BK uses. We'll leave it purple. So we're going to add that 343 here. So if you thought 77 candles was hard to move, 343 candles is difficult as hell to move. 231 is difficult as hell to move. So when you see that these are all looking upwards, it is a very good indicator we're probably going up. And you know, it was sideways, it was down here, it was all, these were all pointing down over here, and then these started to point up, but the blue pointed up, but the purple, which is harder than the blue is 77, the purple is 343 candles, and so the blue going upwards was a good indicator, the white going upwards is a good indicator, but this purple line still staying down, and this white line, this 231 line, so this 343 line and this 231 line, these were still pointing down, even though these were pointing up, was probably telling us that we're not, you know, we're not quite going up yet. I don't think so. But when we start to see all 4 of these agree that we're going to head up in an upward momentum, it's probably a good indicator that we're going up. So what BK uses is, he says white over the blue, which really is not the 77, it's the 231, which is this white line, right? When white goes over the 231, we're probably going up, because if this 231 is still over the white, that means we're definitely going down. And you can see this 231, you know, it's showing a good trend, right? And when the white went over here, you know, yeah, it did say we're going up, but when it went back down, you should probably get out. And yeah, over here it said get out, you know, we're going up, but when it came back down, it said get out. And over here, it went up, and it's still going up. So you might have lost a tiny bit, you know, less than, let's see what this measurement was. You click this ruler tool, pop it down anywhere, and for 1 point, and bring it up to another point. So over here, you know, 0.44%, you would have made 0.44% on here. You would have lost less than that over here. You'd have made a little bit over here, and down here you would have been all right. So maybe a cumulative, you know, 0.7% in terms of how much you might have lost making these trades following the white going over the 231. But right here, boom, if you hit this white over the 231, bang, you would have rode this all the way up, and you'd have been good. You'd have hit at, from down here to up here, you'd be up 2.82%. And look, we're not looking for 2.82%, but I'm just showing you on a 1 minute chart what that looks like. Now, the 1 minute chart is very deceiving. If you try to trade on this, you're going to have a tough time, because there's so much action going on. There's so much volatility going on the 1 minute chart, that I would not advise anybody to trade on here, even though we've done it. You will lose a lot of sleep trying to watch this thing. Okay, it's not something that I would suggest to anybody to do as a viable method for trading. You know, it's up to you, man. You do what you want to do. You feel me? But I wouldn't do that. So and it's really, really volatile. Lots of price action. But it's a good indicator of where we're going. So look, if on the 1 minute chart we're white over the blue, the next thing I want to do is I want to look at the 3 minute chart. Now, this is the same exact thing as the 1 minute, but this takes 3 minutes to make a candle. So each candle is 3 times as long. So we're measuring price action within 3 candles. This gives us like a more broader indicator, right? A more broader perspective of what's going on. And as you can see, on the 3 minute chart now, this 343 line is flat. It might hook up. The 231 is hooking up. The 77 is hooking up, and the 7 is obviously high. But the 231 is still telling us, I mean, the 343 is still telling us, hey, take it easy. This might not be it, okay? Just keep watch, right? All right, now let's look at the 7. Now on the 7, we're sideways on this 231 MA. That means that it's hooking and it's flattening out. It might hook up. The 77 just hooked, all right, and the 343 is still staying flat. And the reason why these are important is because it takes a lot to give this 343 candle moving average, enough juice to change direction. Okay, so that means if we are changing direction, it's probably a substantial, indicator on this larger candle, right? Same with the 77, but less. It takes less than the 343 to move this, and it takes less than the 343 to move this line, this 231 line. But nonetheless, they're moving, right? And so it flattening out, like this flattening out and this starting to flatten out, is a good indicator that we might be looking at hooking up, right? Now, on the 11-minute, we're seeing a great indicator for the 7-minute chart, 7 candle moving average, but it just crossed over the 77, which is a cool indicator. And this 231, it still hasn't broke it yet. So it stopped at this 231, which is kind of crazy that, and you'll see this all the time, that this line stops right here at a key indicator, right? It might stop at the 231. I mean, the 343 might stop at the 231. It might stop at the 77. And it's either the line or a candle might stop right under it. It might bounce under it and come back down. But it stopped right here, and it could have broke through, but now we have this red candle beginning to form. And if we have a couple more of these, this 7 moving average might get rejected and might come back down, right? And that is a great indicator that it's just not time to get in, because it didn't break through this 231, and it damn sure didn't break through this 343. Okay, now move on to the 21. Actually, we'll skip the 21. We'll go right to the 33-minute. Now on the 33-minute chart, we're still way under, right? This is telling us that, look, Teddy, we're going to need a lot of buy side action to move this white line over this gray line here, this 231 line. We're going to need a lot. And to get it over this 343, bro, we're going to need a lot of action. We're going to need the Bitcoin price to be, hitting the 9500s, 95 something, probably in here. So because we can measure these candles, 1 candle, 2 candles, 3 candles, 4 candles, 5 candles, 6 candles, 7 candles, 8 candles, we're probably looking at within the next 8 candles. So within the next about 4 hours, we're going to see if this white line can make it over the blue and possibly contest with this gray line, and if it doesn't happen within the next 4 hours, it might look longer, but we can check back in within 4 hours to see if that happens. And in some cases, like with BK, he's really good at reading this stuff, and he pulls out a lot more tools than I'm using. I'm just a baby with this, but he can tell you on the day to watch, what day to watch the break of, a moving average intersecting over or under another one. But yeah, so we're not looking too good just yet. We still need, on this larger chart, we still need a lot more action to give us a really good indicator. Same with the 77. If the 33 isn't looking that great, then the 77 probably isn't looking that great either. Now, yeah, it's going to take a lot just to get over this blue, and we have the 231 and the 343 beginning to agree on a longer perspective. They're beginning to agree that, of the direction that we're going in. So if I see on the 77 this thing starting to hook down and the 231 also hooking down, I'm going to pretty much know that, yeah, even though it might look like some good price action over here, we're not out of the woods yet, Dorothy, and we're probably going to go downwards, right? then we could go to the 343, and on a macro perspective, this is what it's telling us. We had a great run here at 68.82. So 343 is like just under 6 hours, right? We had a great run here. It was cool. And if you got in over here, great. From 6,900, you rode this thing all the way up to 93.31. So if you looked at the 343 and used that for your metric to get in, which is what I would suggest, you know, you're looking at in the last 59 days, in 60 days, you made 32% on Bitcoin, just like that, which is cool. It's cool. It's cool. It ain't bad. I wouldn't say that's bad, but you know, that's great. You know, making 60%. That's a great thing, especially depending on how much money you're working with. However, so this white line now is saying, hey, white line, we're going back in the house. If this 231 is the house, we're going back in the house. And the fact that it crossed downward and intersected here, which you can see, is a good indicator we're probably heading down. Okay, and so we can look at these smaller intervals, and even though they look good, right? Like you look at the 3-minute, it looks good, man. It broke out of the 230, 231, 343, man. It's looking great. When we look at the longer intervals, and the longer intervals are starting to look bad, that's telling us that we're probably heading down. It's a high likelihood that we're heading down. And so don't use these to give you an indication of what's happening short term, because they can fool you if you don't look long term on these larger candles to tell us where we're going in a macro kind of way. The micro might look cool, but the macro is not looking that great, and vice versa, right? If the micro isn't looking that great, but the macro is, like let's say on the 3-minute chart, it was looking like this. It was looking like down here. Let's say the beginning of the chart was over here, and it was looking like, wow, Bitcoin's going down on the short term. But on the long term, it was telling us, that Bitcoin was, if it looked like this right here, if it looked like that, where on the short term it didn't look that great, but on the long term, we had just broke out over the 231, we just broke out over the 77, we're approaching the 343. It might look like a good time to get in, especially if it was like maybe over here where we did break out of the 343. Short term didn't look that great, but because it didn't look that great short term, that might indicate a good entry position, right? Because the prices are down short term, but long term we're looking like we're going to go up. So you're looking at this entry position right here, and if you did take that, boom, you hit now on a long term chart, boop, start hitting these great intervals, these longer intervals in a better way. And if you got shaky hands, this big red candle might shake you out of the market. You might be like, oh man, I'm going to lose my profit. And so you dump out, even though your profit would have been cool. You'd have been riding all this. But if you had just listened to the indicator telling you that we're still above, there's so much distance between the 341 and even the 343 and even the 231 and that white line. There was so much distance here that it would have took so much negative price action to drop this all the way down here. So if the indicator said, you know what, yeah, it's not looking that great, but it's not looking too bad, stay in it, boom, you would have hooked up, and you'd have been cool, you'd have been great until you got out over here. And so yeah, that's a long and the short of how to read these charts, how to use this. Something to understand is that old resistance becomes new support. So if right here, this sideways action indicates some kind of support, right? Even though it fell through over here, when we come back up on the other side, we're going to see what price was that? That was like in the 7,900 range. When we come back up, we're going to see some more resistance here, or at least support anyway, or support resistance. And so yeah, in like that 79, 76, 7900 range, we're seeing that it went sideways here. So that if we pop up to this level, expect some resistance, and it might come back down, but we popped up to this level and it didn't come back down, it popped back up. And then over here we saw some sideways action, and it gives us an indicator of where things are going to cool off at, right? Whether we're going down or going up, right? And those are things to keep in mind. The other thing is, use the chart for your indicator, okay? Like watch, then act. Read the chart and act accordingly. Okay, you got to make your best educated guess using all the information. Understand that it could go up, it could go down, or it could go sideways. At all times, okay? Also, there's news, there's things that happen in the world. There's big round even numbers psychologically, like 10,000 and 9,000 and 8,000 and 8,500, and and these are numbers that people have set buy orders at or sell orders at and whatnot. They have to factor into the way you read your chart. All right, psychology is at play at all times. And so like with the pandemic, we saw a major crash in the market. Here's another thing, right? You can look at the day chart, which is cool. This is a cool indicator also, and the day chart will tell you where we're at. If the day chart is saying we're above the 343, we might stay above the 343 a little bit. But if on the day chart, it's looking like the 343 is flatlining, might even hook down. The 231 is flatlining, and if the 7 is coming down, this 231 and 343 might also come down too. And I'm hoping that it does. I'd like to buy more Bitcoin at cheaper. But yeah, this day chart is a good indicator too. When you look at this on a very wide macro level, you start to see where we're at. You could see that this was the top of the market. This was what could be considered as, I guess, a false breakout. We're breaking down, and this was clearly a bottom, and now we're coming back up. And the fact that this white MA, the 7 moving average, broke over the 77, broke over the 231, broke over the 343, it's a good indicator we're probably in bullish territory. Now the fact that this came down here, bounced, came back up, and is now pointing down again, is probably going to try to retest this lower level. It's going to try to re-break through, it's going to try to break down again through this lower level. It's looking like that anyway. This is an indicator that you should just be very wary and watch this market. It could do anything at this point. We don't know what it's going to do. But when there are more definitive indicators going on, you can really make better educated guesses as to what to do. But yeah, I'm just a baby in this, man. There's a lot. It gets a lot more complicated than this. There's a lot to learn. This is a sport. It's a lot to practice. Remember, you're going to pay tuition some way, shape, or form. I would highly recommend joining BK's paid group. Brandon Kelly, the author of The Boss Method. I'd highly recommend joining his paid group if trading is something you want to get very serious with. To become a master, you got to submit to one, and he definitely is a master at freestyling on the Fibonacci. We've done very well following his recommendations, so I recommend it to you. But yeah, hope you enjoyed this video. I hope this helped you understand, how to read these charts a little better, how to apply some indicators that might work for you. But yeah, hit me up in the comments. Drop a like, subscribe, please, and thank you if you do or you did. And I hope to see you on the next one. All right, peace.